had the opportunity to actually go to one of my board's webinars for Nexus here in the Burlington County area. And Paula had a great product and did an awesome job explaining one of the products that is available for homeowners out there that are looking to, sell their house and buy a home at the same time. So right now I have Paula Hune from Absolute Mortgage. I really want her to basically explain the product in detail. But first, can you tell me a little bit about yourself? How long have you been in the business?
Yeah, thank you so much, Dee, for having me here. It always means a lot when I can talk about my business and the things we have going on. So I've actually been in business, and it's so funny, me and my friend were thinking about this the other day, almost 20 years, and that made me like choke up a little bit when I included some early on origination, cold calling in my late and early 20s.
Wow.
Late teens, yeah. So when you add it all together, literally I've been in the financial and the mortgage business almost 20 years and have helped thousands of homeowners reach financial stability and financial goals using real estate.
That's awesome. I'm glad that some people that I've talked to in the past, 6 months, they have years of experience in this business. And sometimes you wonder why we stay. It is what it is. You love what you love. You do what you do. So I want you to tell me a little bit about the product that we're going to talk about today and why a homeowner would actually want to utilize the product.
Yeah, so the product is called Buy Before You Sell. So the best part about Buy Before You Sell, which is the name of the program, is it allows a seller to take advantage of the majority of the equity in their existing home, use it towards their new home, and not have to change or alter their buying power of the new home. Now, why it's beneficial, I want you to kind of close your eyes and imagine you're selling your first home, or you're selling any home, really, and you have boxes everywhere. You still have your furniture because you're still living there. You have pets or young children, and here you are listing your house. It's on Showtime, and yet 20 minutes ago, you got another request for a showing. So you gotta grab the kids, pack the dogs, hide the cats, put the notes up. Please don't let cat out. Please don't let dog out. Watch your step, things like that. Rush out of the house and hope you don't cross paths because it's always awkward. Then you finally do sell your house, and now you have to close on the same day that you buy your house, which, imagine this, going out and putting in 20 offers just to get a house. That's the reality we live in right now. 20 houses, right? If you're a contingent buyer, and a contingency, if you don't know, is when I can buy your house contingent on X, Y, and Z happening. And a lot of times when you have a house to sell and you're using the equity to buy the new one, you have to close on that house. You have to find a buyer. And although listing agents are not concerned that it's going to sell, I think everyone's pretty clear that's going to sell. It's what can happen during that time frame, because there's so many things that can happen that are out of everybody's control. It's not putting blame on anyone, but anything can happen. So a non-contingent buyer, meaning, nope, I can buy your house. I don't have to move right away. I don't have to sell my house to buy your house, is more appealing, right? It puts you at the top of the list. Is it guaranteed? No, but it's going to change that 20 offer situation. And keep in mind, you're probably going to have to see 60 homes in order to find 20 that you want to put an offer in. Instead of seeing that many, now we've cut it in half, or even cut it even further to a quarter amount of time. Now you're looking at 6 or 7 offers, maybe 10 at the most, and you're going to look better. And then a lot of times, sometimes your offer can even look better than cash, because cash isn't always king.
Right.
We're seeing a rise of wholesalers out there now. So that's another benefit. You're going to get your offer accepted faster. You don't have to worry about people coming in and looking in your house while you're still living in it. You can completely move out, and now your realtor, so Dee, you'll be able to show a house completely empty. And I'm going to ask you that question. What would you prefer, to sell a livable house, like a house where someone's living in, or a house that's an empty shell that you can stage?
Well, and I want to go back to the contingencies, because let's just be honest, when it comes to submitting an offer, the person who is accepting the offer is looking for the least path of resistance, right? So they're looking for easy. When you don't have a contingency, or at least have your property on the market prior to, as opposed to, okay, I'm going to go find this house first,
Right.
and then I'm going to put the property on the market. That's not going to work. So in this particular situation, this is a very good option for a seller.
Yeah. Oh, from the seller. Yeah, absolutely. But now, so selling a house after so after you buy your new home and you move out, now you get to sell your house. And again, you can stage it any way you want. When property is staged or at least empty, you can actually get more money for the property.
Mm-hmm.
And especially right now, we're seeing profits between the 2 and 5% increases of an empty house compared to a house that's lived in or living in.
Right.
So that's some benefits to that.
Okay. And how do you determine the eligibility and criteria of the borrower in this particular sense, actually seeking a new home?
Yeah, so it's actually really easy. So the first step is always to get pre-approved, okay? And I know what I'm thinking, I'm already pre-approved, or, oh yeah, I was gonna do that once I found a house to buy. That's my favorite line. I'm gonna get pre-approved once I find a home. That's not actually how it's supposed to work, because you're gonna fall in love with something that you potentially can't buy. And
Right.
that's heartbreaking. Absolutely. It's heartbreaking for everybody. Like, not just the person shopping, it's heartbreaking for us. I think Dee, you can contest, like, it's just like, oh no, like, but you love this house and you try everything, and sometimes the puzzle pieces just don't work. So it's important to get pre-approved first so we can make sure that the program, one, is going to be a smart option, and number two, what your limits are as far as shopping around for a house, because you're still going to have a budget. You still have to fit certain parameters. So we have to look at these things first. Then, and if you don't know, if you've forgotten or you didn't use a mortgage to buy your first home, we look at credit, we look at your income, we look at how much assets you have, like how much money you have saved, for example, and then we look at the collateral, which is the house you're buying. Is it worth what the list price is? Does your down payment work? Things like that. So those are the 4 normal criteria that we look at when we're pre-approving a client. But there is an extra step in this, and the extra step takes about 48 hours. I know, so long. It does feel that way in real estate sometimes, but just 48 hours. If a client wants to participate or just get an idea even how much they could get using this program, it's a very simple questionnaire that I fill out, that the realtor fills out. The buyer doesn't have to do anything for the most part. And then within 48 hours, we get the verdict back on if they qualify for the program and how much that they qualify for the program. And then it's a matter of just taking the next steps of, finding a house to buy so that we can, get the paperwork and everything started. Once you're done with, once we get that approval, once you find a house and you're under contract, one thing to consider is you do have to eventually sell your house. So the way the program works is they're actually going to put a backup offer, cash offer, on your existing home, so that when I'm pre-qualifying them and pre-approving them for their new home, the nice thing is that I don't have to include the mortgage in their debt to income ratio. So their buying power stays the same as if they were contingent.
Okay. Let me ask, when we're submitting an offer for them, and this is one thing that I ask the buyer's lender, do me a favor, if you can reach out to the listing agent and one, talk about the buyer, you've vetted your due diligence. In this situation, are you contacting the listing agent to explain how the program works, just in case? Because again, I only know about bridge loans. I didn't even know about this loan.
Yeah. And it's a different type of bridge loan. And it's yes, so the quick answer is yes. And it's funny because I never understood why lenders wouldn't want to. We are in a relationship business, and anytime I get into any opportunity to build a relationship with anybody, I'm all for it. So I'm yeah, give me that listing agent's number. Absolutely. I want to, I want to introduce myself because one, I want to show that I am attentive. I want to show them that I am big on communication. And I want to tell them all the details, because I don't want them accepting an offer if they feel weird about it.
Right.
Also, it's a good advertisement for the offer. Or for the bidder.
You're right.
So, yeah, yes, 100% yes. I'll call a listing agent if they don't even want to put an offer in.
That's awesome. When it comes to the title aspect of it, when it comes to finding out there's liens on the property, is there something that's done ahead of time just to be sure there is nothing, no liens against the property prior to offering, you know what I mean? On their property, the seller's property.
Exactly. So they are going to do their own type of check, and that's part of that 48 hours of what they're doing. They're doing their due diligence to make sure it's a smart move. Because remember, this company is saying, if you don't sell it in X amount of time after you buy your home, we have to buy it with cash. And then they become the owner, and no lender in their right mind wants to own real estate.
Right.
Okay. Despite what people may think,
It's
a bank, they don't want to own real estate.
Right.
So they want to make sure that there's not going to be any hiccups and things like that going through the property. They are also a little bit restrictive in the home. Like, for example, it can't be, they just added this one, I think I caused it. You can't have a house that's on the market too long and do this program, because again, it's, well, why was it on the market for so long, and are we going to make our money back? But the cool thing is, if they ever do have to purchase that house, the buyer will still get any equity, like any extra money that they sell for. So let's say they took out 100 grand, but they sell for 150. The buyer or the original owner still gets that 50,000. If they just want their money, they just want to walk away with what they made, everything else to give back to the buyer. They still use UD as their realtor to list the house. Yeah.
Okay. And that was literally my next segue was, what happens if the borrower is unable to sell the home within a specific amount of time? And is there?
It's 90 days with a potential extension to 120.
Okay.
And then when this company will come in and buy it, just to satisfy all the liens and also satisfy all the other guidelines, because remember, they bought their home on the contingency their house is going to be sold. So post-closing on that home, they have to show that the house sold. So they'll come in and do that. In this market, you're looking at 30 days on an empty home, especially if it's, nice and clean.
Right.
You can flip that pretty quickly. But keep in mind, this product doesn't go away once the market flips or becomes neutralized or anything like that. It's not gonna go away. We're gonna have this product for a while. So it is something to consider when you're looking at your long-term plan and how to use this.
Now, this is going to be like a two-part question. Mm-hmm. Let's just say, okay, so for purposes of fees and the interest rate. So again, two different scenarios. The seller is the borrower, right? But then you have the program side where they need to buy the home, right? So what are the fees associated with the sell side, right? Because we're talking about two different sides.
Right.
And is there a fee tacked on after those 90 days if they have to, the actual bank has to buy it themselves?
Right. Those are phenomenal questions. So the first one first, there is no interest rate on the buy before you sell loan.
Really?
0%. Yeah. Otherwise, if they charge an interest rate, there would be a payment due. And if there was a payment due, then we'd have to include it in your debt to income ratio.
Oh, right. Right. Makes sense.
On your home. So it's a 0% note. What they do is, though, they do charge a fee, 2.4% on the sale of the home.
Okay.
So when they sell the home, they do have to also pay a fee to that. In this world of realtor fees, I've had realtors negotiate their listing fee. Because remember, you're still listing the house.
Right.
To help offset that. But in reality, I don't think you should give up your commission for doing this hard work. It's not like you sit on your laurels to get your business, right? I think we do a job and we deserve to get what we get for our job. The idea is, again, when you move out of the house, you're going to get more for the property. So you can make up that 2.5% or 2.4% by being able to sell it and list it for a little bit more than if you could, if you were living in it.
Right.
Yeah. So that's how that fee goes. The fee for the purchase mortgage, for the one they're buying, that's going to be whatever mortgage. Now, they do have to get, I will say, if you're going to use this on your home, you have to qualify for a conventional loan on your new purchase.
Okay.
And when I mean conventional, I don't mean any of the specialty conventional loans, particularly something called Fannie and Freddie, which again, to a layman, you just know it's going to be conventional. Okay. You call me, get pre-approved. And that's why we say get pre-approved first. Because if you're only qualified for a certain type of program or loan, we don't even want to talk about this, because then again, we're just teasing you. So get pre-approved first, so we know that it's gonna work.
Got it. Okay. As far and the fee for the sell side of things, that is only at closing. Is that
Yep.
correct? Okay. So there's no
Absolutely.
upfront fees or cost.
No,
Okay. All right. And I know you brought up if for any reason they need to use that money to fix up the property.
yeah.
Do they sit down traditionally a table? Like, is this something that's done in the ether? Like, how does how do they get the money? How does the process work?
Yeah, so they get the money current at their new purchase. So if they're gonna take out, if they're gonna, and you don't take out, you don't have to take out the full amount. That's the other thing.
Okay.
If you're buying a house and you only need, let's say you have built, or let's say you get approved from this program to take out 100 grand, but you only need 50 to buy your new home, you can just do 50, that's fine, right?
Okay.
Like, think of it that way too, we're gonna be smart. But if you took the other 50 out and used that and invested it in proper upgrades, right? And that's where I'm going to refer to you as being the realtor to say, okay, what would make the best return on investment? We all know new paint is the cheapest way to get more money on your home. Yeah, just get some nice new paint. Everyone loves that fresh paint look when they walk into a home, things like that. But now it gives you that ability to do those minor upgrades on your existing home to, again, get it presentation ready, get it listing ready. I have had a house where we've had questionable choices of colors. It was an investment property, to be fair, but they wanted bright colors, and I'm like, that's not going to show well. And so again, we invested a little bit in the paint, and it paid off. So paint can go a long way. I'm a big fan of that. So even though you could get approved for the same amount, even if you don't need it all, you don't have to take it all. It is a wise decision to use some of that to enhance your property, to get it more show ready.
Got it. Okay. Sellers have to think about is that simultaneous close situation, right?
Yeah.
Give an example of a successful transaction, that you
that worked. How did this work? Yeah.
work. Yeah.
So I was working with this one realtor. We could not find a seller for her house. Like, it was getting very hard. The house was on the market for, like, I think 30 days. And she loved, like, 3 particular new construction. Now, these are new construction homes that she wanted to buy. She found one. She almost had an offer accepted, but they wanted the contingency removed. Most builders, when you're purchasing new construction, really don't like the contingencies. So if you can, again, we go back to removing contingencies. So here I am, I'm like, okay, asking me if she would qualify with holding both mortgages. I'm like, well, yeah, except she doesn't have money now.
Right.
Because that was her whole plan, is using the funds from the sale of her house to purchase the new home. And it had nothing to do with, can they qualify? Yeah, plenty. Great job. But you didn't have enough to save to get what she wanted in the budget she wanted. And I am extremely budget minded. I'm very aware of, seeing all the finances of a client. Kind of have to protect their better judgment and be their logical mind for a second sometimes, to be like, you said you wanted this to be your payment. What are you going to give up so that you can pay more, right? You've got to be mindful of that. Not to say you can't do it. If you can do it, great. But, we have to have that discussion.
Right.
In comes this program, and it was like perfect timing, because we got this program along. I'm like, wait, this might work. I submitted the questionnaire, took 24 hours. Within 24 hours, we got back up. She got approved for the amount of equity she would need. It was slightly less than what she wanted to put down. So I had to sell it to her. So it was slightly less. We talked about it. We created a plan of action on, okay, here's what we're going to do when the house does sell. You can do a one-time lump sum principal payment. You'll be fine. And she was okay. We closed on the new construction because it was almost done being built. It's another reason why they wanted non-contingency, because they knew they were so close. Purchased the new construction home. She moved in 2 weeks later. They were able to list her home. She got $50,000 over what she planned to, because once she moved out and they took out all of her stuff, the project just showed better. She didn't even do any upgrades or anything. She just moved out, right? I think she had a professional cleaner come in. I think that was, like, the only thing. But she moved out, and it just looked so much bigger and brighter and better, that the offer that they did take, and it sold within 2 weeks. Well, they got it under contract within 2 weeks. I'm sorry. Like you and I think that's always a sell.
Right.
weather reporting. But like, how cool is that? Like, how cool is that? Now, I don't know if we would have the same, if we're in that same market where you get that much of an increase.
Right.
Definitely paid for that 2.4% and then some.
Right.
And she had that peace of mind. She got into the new construction home that she dreamed about. It was like such a great story all along. I love the story. It's fantastic.
So,
Yeah.
and this is that situation where, as a homeowner, if you don't want to be a tenant and you don't have to worry about doing a rent back, doing the whole transaction process, definitely a better option. When it comes to the questionnaire, can you disclose or can you advise what's typically on the questionnaire?
Yeah, it's all the same information I'm gonna ask you when I do the pre-approval, which is why we don't have anything for the buyer to do, because it's like their name, their house address, what they think it's worth, how much they need, things like that. And then for you, it's gonna be, hey, do you have pictures of the house? Like on the real estate questionnaire side, it's gonna be more like, okay, tell us about the house and why it's worth what you think it's worth, and things like that. So you almost have to sell, like the realtor sells the real estate part, I'm selling the borrower part, and we're working hand in hand.
Okay.
Yeah.
And as far as at closing, the when they do the sale part and they go to purchase those funds, the actual lender, third party, they actually get those funds at that closings from their proceeds, right?
Right.
Can you tell me about a time where it didn't work?
So I told you about this one new overlay that they have about can't be listed for over, I can't remember the exact how many days. So I had this client, or I had a realtor who had this house and was on the market for a long time, and the listing was about to expire. So we're like, okay, Hail Mary, what if we use this? And the house ultimately was probably a little overpriced, but it was beautiful. Like we thought it was like right there.
Mm-hmm.
So I submitted the questionnaire. I sold it sold the idea to these clients, and they were fantastic buyers, like fantastic clients, like great credit, great income, great everything, right? And then we got the questionnaire back and like, yeah, we won't touch this. And I'm like, why? And so for like the next 48 hours, I'm literally like going through, I'm like the whole reason, like everything I told you as to why this program is beneficial is why this house is like sat on the market so long and was getting to the point where it's expired. It
Right.
was because they had young children. Their house had a lot of toys to entertain. They also worked from home, so there was a lot of things going on, and they couldn't have showings at particular time because again, they couldn't like corral everybody out together. So it was very limited showings. And again, they couldn't hold a ton of open houses.
Mhm.
So, the amount of people to see the house was shortened. So I made up this big, I would get the gab. So I'm like writing up this whole proposal and things like that. And we got a deal. We actually got a deal, right? They came back to us, they said, okay, we're gonna do this, this, and this. It was a risky deal for the sellers. I'm not gonna say it wasn't, because if it didn't sell for X amount of dollars, they'd have to like cushion that. They'd have to make up the difference.
Right.
Clearly, because again, the company that sponsors wants to make their money. Like they just want to get back what they're owed. So if they gave them 200,000 and they weren't going to make that on the sale, the clients had to pay the difference. Kind of like an appraisal gap, if you think of it that way. And then they were very uncomfortable with that, which I totally understood. They didn't like it. And they said, no, we're just gonna wait. And the funny thing is they eventually did sell their house for what we said it should have been in the first place to drop it down to. And they actually got exactly what we would have done if we didn't clear it. One of the company's biggest problems with the property was that it was sitting for so long with no price drops, no significant price drops.
Wow.
So they didn't know where that sweet spot was going to be, and they couldn't judge it, and they were like very nervous about it. Because again, like I said, the whole reason there are guidelines and overlays and mortgage parameters is because banks don't want to be real estate holders.
Right.
Really all they're doing. And I think a lot of people lose focus of that because I'm such a good person. I promise you can be like the best person in the world. We'll always try to get you a mortgage. But we have to work in the constraints.
Have you ever had any absentee owners or investors who have tenants and you've had to deal with this type of situation? Because it just kind of, it popped in my head for, those absentee owners that they want to just get rid of the property, but they have a tenant. It's a situation, of course, you have to wait for the tenant to find suitable housing, but have you had that situation?
Well, that's why this program only works on owner occupied properties.
Makes sense. Okay.
Exactly. And that you hit the nail on the head. Now, I did have a deal where that happened, but we didn't use this program at all. We had to just wait it out till they found an apartment.
Okay. Got it.
Yeah.
Okay. Are there any other programs that you guys offer outside of, do you have like any CRA programs? Do you have any, tell me a little bit about the programs that you guys have.
So we have we have the full suite of programs. We have all your traditional loans and lending program. If you're in the state of New Jersey, we do offer the New Jersey first time home buyer, as well as the New Jersey first generational edition, which I love, because I work in communities where there are a lot of first generational home buyers, and I just got chills, because nothing warms my heart than helping those people get their house and to be the first one in their family to own a home, because that is so special and so amazing. So the fact that New Jersey is recognizing that and giving even additional funding for that, like, smart move, New Jersey. I do also have down payment assistance programs for people who may not be first time home buyers. And again, all of these programs have different rules and guidelines and restrictions. So, it's not a guarantee, but these products are there, and it's worth working with a knowledgeable professional to see all of your options and to see, okay, well, what's up there to help different situations. I can help borrowers who maybe are self-employed and have been told no because they don't show a lot on their tax returns. I can help with your lower credit clientele. Just so you know, FHA will go down to 500. It's more difficult at that point.
Right.
But FHA, I mean, it's no secret. You can go and Google that. Their minimal credit requirements are 500. Just some banks in some places have overlays where they don't accept them. Let's see, what else do we have? We have this really fun Path to Own product that I'm doing a webinar on at the end of the month. Path to Own will help save deals that could potentially be, dying on the vine, so to speak. We can
I like that.
We can try to resuscitate it and bring it back to life. And again, will it work every time? No. But will it work? Could it potentially help, 1 out of every 10 people? That's a save for me. That's a huge one when we can do that. I mean, I could go on and on for an hour discussing all the cool programs we have, all the things that we have to help make life easier. We have great communication. We have a wonderful email system so that you and the buyer always are in consistent understanding of where you are in the process. I just love it. And I do call people. I use the phone a lot.
Yeah, that's one thing that I like to do is, when I'm making introduction to the listing agent, when I'm submitting the offer, and I do submit offers on video. I do that. The one thing that I do ask of the lender is, do me a favor, reach out to the listing agent, tell them about the buyer that you're working with and that you've done your due diligence, and that there won't be any surprises. Now, are there surprises that you have no control over? Someone loses a job, there's a death, that's life. You can't do anything about that. But if you've done your work prior to, it's a team effort where I would love for the lender to reach out to the listing agent.
Yeah, and I always love working with people that are in that understanding, and they do find it more appreciative if I keep, talking to them throughout the process, because it does make, things happen all the time. And I think we sometimes get caught up in the whole, oh, you said this and you said that, or, we as lenders do the wrong thing and we suddenly feel guilty because we feel we take all that ownership on ourselves, and we try to fix it and make it worse all the time. It happens. I see it all the time happen. And, really when it comes down to it, it's just, it starts with the initial interview. When I talk to my clients, we talk about everything, and then when we do that, I get a better idea of what their needs are and their inner needs, like that explicit need. And that helps figure out, how we can overcome, any situations that come. And I stopped calling things problems, by the way.
Solutions.
I call them situations.
All All right.
I read the book Relentless. I can't remember the
Uh-huh.
author,
Yeah.
fantastic book.
Hmm.
You never have problems, you have situations.
Right. Situation.
A problem's really big, right?
Hmm.
Situations is like, we have a situation, the deal won't work, we can't find, there is no solution, we have to back out of the contract, right? That's like your worst situation.
Right.
That kills. But then you have other situations like, we have the situation, but here's our solution. And it kind of hits a little bit soon. It hits easier, it hits better.
I'm glad to hear that you actually sit down or you actually have a detailed conversation with the buyer, because there have been times where, I'd get a buyer or referral and they've come to me with the lender, and it's, did your lender tell you this? Or, did you know this? And people that know me, especially the buyer side of it, I do actually sit down and I do an hour consultation with them, because I want you to understand the process and anticipate, some things that may happen. And when I do sit down and they tell me the lender, well, you didn't go over that with your lender, or you don't, you know what I mean? So I'm glad to hear that there are lenders out there that have that deep, long conversation about, the actual process.
Yeah, and sometimes we got like, sometimes I chip it, depending on the person I'm dealing with, because sometimes it's so overwhelming, I can like freak them out and then they don't.
Right. Yep.
So it's like, let's find out, and again, I go back to finding their true inner need, because when things get tough, and when I'm asking them for yet another copy of something they feel they've sent me,
Right.
in reality, they just keep sending me the wrong thing.
Mhm.
Like, I remind them, look, you want that kitchen with the island so you can have Thanksgiving dinner with all of your friends. And I get to know them on that level, number one. Number two, when we remember why we do things, it doesn't make it that hard.
Right.
Everyone's happy at the end when you have keys and money and cash in hand. Everyone's happy at the table. You sometimes do forget all the things, I'd send the bank statement 3 times because I kept leaving out the blank page.
Right.
Like, you forget all that the minor stuff then becomes minor, but in the moment it can feel really heavy. And when we bring that back down to the why, it's a statement. I can print that out really quick. It's not a big deal. So that, I'm really big on that. And then, going through the process, it's kind of like, okay, here's where we are now. Now here's the next step. Here's what to expect. And I do it in little bits. This way it's more palatable.
Yep. Okay. I truly appreciate you sitting down with me, going over this program. Tell us how to get in contact with you. Are you on the social medias, the interwebs?
Love the interweb and social medias, maybe a little too much. So you can always call my cell phone, 856-617-3049. You can also visit me on my website. It's phun.ahmcloans.com. Social media, you can find me at Paula_loves_lending, or just type my name in Google. I'm up there. Yep, exactly. I can answer any questions. I can really be your lending advocate throughout the whole home buying process.
Paula, thank you so much. I appreciate it.
It's my pleasure. Thank you so much for the offer. This has been so much fun. I love it. Thank you.
We will do this again.
Yes.